Hi everyone, welcome to today's lesson at the Santa Cruz Financial Academy. Today we're going to be talking about personal organization. My name is Kyle Roseman and I'll be walking you through this process. Once again, we're going to be putting together this financial binder. So you'll be finding a lot of worksheets to do, to fill out. This is one of the most active sections of what we teach. It's one of the most tedious, one of the most boring parts, but it's also one of the most rewarding. So let's get started. In this chapter, we'll be compiling your financial statement. This includes 4 documents: your income statement, a budget, your debt plan, and a balance sheet. I'll be your guide here as we put all this stuff together, so don't worry. It's really just kind of tedious stuff, not so much thinking. So let's get started. First on our list is the income statement. This is a fairly straightforward process. We're going to make a record of our income and where it comes from. And so it's a small part of our financial statement. As you can see in the example, we have a spot for our job, any other source of income that's coming in, and then our total. What's important to point out here is that we're not concerned about how much we made last month or how much we made the month before. At this point, we're putting together a statement of projected income, what our monthly goal is, what we're expecting our cash flow, our positive income to be every month, kind of our personal expectations. So when you take a look at mine, you're going to see $2,500 coming in every month from Adam and Darcy. That's the name of the entity that I'm filed under for my corporation. Then you're going to see $1,200 coming in from other. That's kind of side work that I'm doing as I start to build my business. Another important note here is that we're making a record of our cash earnings. This is because we're putting together our budget. So when we think of our income, we're going to be thinking of the money that we're actually receiving after taxes. Now that we have an understanding of our monthly earnings, we're going to take a look at our living expenses and form a budget. As you will see, our money ends up going to 3 basic places: living expenses, debt that we're carrying, and then our cash accounts, our equity accounts, retirement, stuff like that. Our living expenses consist of any reoccurring costs for goods and services that do not leave us any sort of equitable interest. What I'm referring to here specifically is the difference between where we place rent or a mortgage payment in terms of how we structure our budget. Because one of them is kind of long-term debt that we're carrying, and another one is just an expense. It doesn't actually leave us with any sort of equitable interest. Other things we'll be listing here are phone bills, groceries, gym memberships, other club memberships, insurance. Definitely we're going to want to put in a section in our budget for fun activities, whatever those are, casual expenses, shopping, stuff like that. Our debt accounts are loans that we make payments to every month. A credit card goes under this column when we're carrying a debt from month to month on that card. Our credit card doesn't get listed here if we're paying it off every month. Other items that we may have listed under our debt accounts are mortgage payments, auto loans, not leases, equipment loans. Every item that is listed here is a loan. That's basically the big kind of thing, because we're going to be looking at paying it off quicker and paying less interest. So that's why we've created this section here, is to look at that. Also, we're also going to be putting together a whole debt plan, which kind of goes into this whole section specifically. So we're going to be looking at loans which we can pay off quicker. That's why we're not going to be putting lease items here. Those are more like expenses. Our equity and cash account contributions refers to any money that is directed into a cash account, such as cash reserves, savings, checking, stuff like that, or one of our estate building vehicles, such as a retirement plan, a life insurance policy, home equity contribution, cash contribution to an investment fund of some sort. This could be a hedge fund ran by managers. This could also be a pool of money that you and some friends or partners are building to invest with. The general idea of forming a budget is to understand where all your money is going. Cash reserves and investment accounts constitute as a final resting place for our money. And you'll kind of see how everything, we kind of have to put this stuff in our budget in accordance to how we'll be running our whole cash flow scenario. And that kind of comes up later in the next chapter. But really right now we're going to be breaking up our cash flow into 3 different destinations, you could say, which one of them is expenses, our carrying debt, and then whatever estate building vehicle or cash account that we're working on building. So this is what it should all look like. We have an income statement, a budget, summary. If you want, you could add colors and highlights. You can see under the living expenses, I have all the expenses besides rent in a darker blue. That was in reference to my understanding of how much I was planning on using my credit card. There are 2 loans there. This is my budget that I'm currently paying off. And at the bottom, you'll see my cash account contributions. So this is kind of how it all works. This is how we put it all together. So let's take a quick look at the budget summary little section there. First, we have our income. Then we have our expenses. Remember, our cash and equity contributions are included in those expenses number. Under that is our remaining balance. This balance is going to come up in the next chapter when we talk about our cash flow strategy. That remaining balance goes to what's called the sweep account absorption. Let's just make a note of that. It'll come up later. We'll talk more about that in the next chapter. And then at the bottom of our summary, we include a note on how much we are contributing to our cash accounts and our equity. Again, that was already a factor into our expenses, but we're just kind of putting a note down there as like note to self, hey, check it out. We're stacking this much cash every month somewhere for our estate. So that's how you put together a budget and an income statement. Now let's take a closer look at our debt accounts and create a debt plan. With the handouts, you will find a worksheet for your debt plan. This is a simple worksheet where you list out your creditors for the purpose of being proactive in paying off your debt. It's pretty straightforward. The idea is to create an order to how we pay off these creditors. An example would be to pay them off with an emphasis on who's charging the highest interest. Another would be to pay off the lowest balance first. Either way, we are being proactive and thoughtful in how we are managing our finances. And that's what really matters. The best way to do this is to pay off your creditors in a way that makes sense for you. As you pay off your creditors, you are lowering your monthly obligation. The suggestion here is to continue to pay the same amount every month toward your debt, even if you are paying more than your monthly obligation. For example, let's say that your monthly debt service is about $500. After a couple months, it drops down to $300. The suggestion is to continue paying $500 a month towards your debt until you've paid off all of your debt. Again, what's most important here is that we're being thoughtful and proactive with our finances. What's most important is to understand what actions will be most beneficial to your situation. Let's say that you felt like you were okay with your debt schedule and your building cash reserves is more important for your profile. Then you might be putting that extra $200 into your cash accounts instead of continuing to pay that towards your debt. So it kind of just depends on what your goals are, what makes sense for you, and what you're really trying to accomplish. Be independent and certain in your behavior. That's the most important part of all of this. Great job, you guys. Okay, we have one more topic to cover here before we wrap up this chapter. Now that we have our budget, our income statement, and a debt plan, all together and organized, we can create our final documentation and this is our balance sheet. Our balance sheet reports our assets and our liabilities. We have in this example the green section that represents our cash accounts and our investment accounts. The blue section represents our credit accounts, and the red represents our debt accounts. Now this is just an example, and yours will probably look a little bit different. But what we have here is this person has 3 cash accounts. One of them is cash reserves, their checking, and their savings. Then they have a life insurance policy that's labeled here as IBC. That's the infinite banking concept, and we'll be talking about that more in the future, but that's just here on the example. Then they also have another part here labeled QRP. That's their qualified retirement plan. So those are all the green accounts. Then we have our credit accounts, and this person has 3 credit cards and a line of credit, which under here is labeled as the sweep account. And again, we'll be talking about that in the next chapter, but this is compiling our balance statement here, our balance sheet. And then in this example, there's 2 loans that they have, and it's an auto loan and a home mortgage. So this is where we're going to track our balances every month. You can see there's a month side, and that's how this whole sheet works. Really, it's the benefit of it is to create projections, and then as we live our life and we go through month to month, we can check in to see where we're at and where we're at compared to where we want to be, where we projected we were going to be. Okay, so what you're going to look at now is actually my balance statement that I put together in, I think, December of 2018. I didn't quite have all the color coding down yet for all the accounts, but that's okay. We're not really going to look at that. What I wanted to show you is that how I've since used it as a reference point every month when I'm going through my budget and how much I spent that much and where all my money went. I can then check the balances of all my accounts in comparison to what I projected. So that's what I want to show you. And we're going to be taking a look at another document here that's kind of an active expense document. And I'll be showing you how to put that together as well. It's also pretty easy. One thing that you probably realized by now is that getting familiar with Excel or some sort of spreadsheet software is going to be very important. This section here shows all the expenses for the month. As you can see, some expenses are consistent, whereas others are variable. The variable expenses in this case are tied to credit cards and debit cards. This information can be collected and analyzed through a number of free tools for your convenience. For some people, they may have online banking tools associated with their bank. This is nice. However, one tool that we'll be looking at here is mint.com. Mint is a platform where you can upload all your various credit card information, and they will collect and graph out all your expense data. They're very helpful, and in this case, both those boxes, the yellow and the red, I was able to copy that directly from Mint and put it into my Excel document. So here I have my income statement, budget summary, and some side notes about upcoming expenses and some wish list items that I would like to purchase in the future if I can figure out how. And this is where the magic happens. At the bottom of this statement, we have a current and accurate balance sheet statement. We can compare where we are and where we want to be. This month, you can see that there was $300 left over on my credit card that I was unable to pay off. You can also see that there are $8 more in my checking account than was projected. This is a very incredible thing, to know exactly where you are and if it's where you thought you were going to be and where you want to be. I may have been $300 under where I wanted to be, but isn't that how it goes? Sometimes you're up, sometimes you're down. What is really important is to know where you are. That's how you can be independent and certain in your behavior. So to summarize this presentation, let's take a look at what we are aiming to create. This is a financial plan, or what I call your financial dashboard. We have our budget and our income statement, as well as our projected balance sheet. One pretty cool thing that you can do with your projections is create a line graph showing a visual representation of how you plan on executing this financial endeavor. And from there, we can create an up-to-date and active expense statement to track our progress. I recommend putting together an active expense statement at least once. We will discuss some other ways to stay on top of everything that requires less effort. However, taking the time to do it once will really help you internalize your cash flow and become aware of how you are spending your money. This is probably the most boring and tedious activity in regards to personal finance, but it's also the most rewarding. I hope that in completing the exercises and through forming your own financial dashboard, you will feel stronger in your own capabilities. As you're doing the work, remember that you can always add to it, so don't let yourself get overwhelmed by every detail. The key is to stay motivated, do what feels good, and then go out and enjoy the sunshine. And with that said, I could go out and use some sunshine myself. So I'll catch you on the next video. Thanks for watching and have fun.